Hello everyone. This is the pre-market report video for today, 2nd April 2024 for the Indian stock market in terms of Nifty and Bank Nifty. As most of us know now, yesterday for the third session in a row, Nifty closed over 100 points positive. Regarding the reason, most of which we already covered in the last pre-market video. During Sunday, China's manufacturing PMI data came as very good, expanded for the first time in the last 6 months, which made the Chinese stocks positive and also increased our whole metal sector to near 3.7%. Then about HDFC Bank, they increased their base home loan interest rate from 8.55 to 8.7%. Means this will help improving the net interest margin, which was affected due to the present liquidity crunch. So, no wonder HDFC Bank increased over 1.5%. Those items which we already discussed. In addition, there are two more things worth to note. First, earlier yesterday, Bank of America released a statement that they are seeing at least 10 to 20% earnings upside potential in PSU Bank. Hence, they believe risk to reward ratio is more on the favorable side. So, PSU Bank's whole sector increased 1.5%. Then the second one, this is not a stock related. For overall, as per Money Control website, FII increased their long positions in single stock futures and reduced their net short positions in index futures when the contracts rolled over into April series from the end of March. As of yesterday for the April series, they are holding near 41,000 crore rupees worth of stock futures, which is new all-time high value in rupee term. And similarly, in the index futures, they reduced their short positions from 49,000 contracts in March to less than 24,000 contract short positions in April month. Overall, this data indicating that FIIs are turning to be as positive. However, after 3 days of net buying, yesterday FII turned as net sellers. The net sold for approximately 520 crore rupees, whereas DII supported the market by net bought for approximately 1,210 crore rupees. Those were the quick takeaway from yesterday's market. Then coming to US market, taking the positive global cues, it opened positive. But at 10 a.m. Eastern Time, Institute of Supply Management released the US related PMI data. In that, for the first time in the last 17 months, the manufacturing PMI value came as above 50. Meaning, after 17 months, US manufacturing sector started to expand, in turn reduces the June month interest rate cut probability to below 50% for the first time in the last 3 months. And as a consequence, increased the 10-year bond yield to above 4.3% from below 4.2%, which clearly market don't want and made both S&P 500 and Dow Jones to close negative. S&P 500 declined 0.2% and Dow Jones was down by 0.6%. However, Nasdaq managed to close marginally positive because Jefferies is positive in Google and other AI-related stocks made the Google share price to increase over 3%. But still, VIX increased near 5% and moved above 13.5. So the takeaway is, though Nasdaq managed to close positive, the momentum was deteriorated. And it was evident in Indian ADR. Only HDFC Bank ADR managed to close on the positive side. All others, Infosys, ICICI Bank and Wipro, all were down over 1.5%. Here, last night, I did found Accenture also crashed over 2%. So, both Infosys and Wipro weakness is related to the whole sector. And regarding the broker's view, it was mixed and I don't know why market took only the negative view. Kotak and MK Financial both released a statement that they're expecting the weak revenue and weak earnings from the Indian IT companies, which is not good, clearly negative. And on the positive side, though Morgan Stanley also echoed the same remarks, but on the price wise, they said they were overweight on big Indian IT stocks. Anyway, judging from the ADR reaction, it looks like market took the negativity more serious. About GIFT Nifty, early morning today, 3 a.m. Indian Standard Time, it crashed and closed at 22,493. Yesterday at the time of closing, the premium between GIFT Nifty and Spot was around 140 points. So equating that for now, it's indicating the gap down opening of over 100 points. Regarding oil, Because of this, positivity around manufacturing in both China and US increased the demand concerns and thus increased the oil price by over 1%. At the time of this video, WTI crude closed at around 84 US dollars per barrel and Brent crude trading around 88 US dollars per barrel. As a summary, though US market closed mixed, the momentum is deteriorated, especially for IT stocks, and I have no idea why ICICI Bank ADR crashed for 1.5%. In addition, GIFT Nifty all indicating gap down of 100 points. But on the positive side, auto sales number and bike sales number for the March month and for the whole financial year was released. Overall, the whole sector got the healthy double-digit growth. However, based on the individual company performance, market might react to it. One more thing, there was a warning by Indian Meteorological Department that India is going to have a severe summer this year, which might cause some disturbance to the power sector. So possibly it might affect some power related stocks. Then as per stock open interest, L&T Mindtree, Coforge, Titan, Infosys and Eicher Motors got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Hindustan Copper, SRF, ICICI Prudential Life Insurance, Voltas and MRF got an increase in open interest with a positive price close indicating the long build-up. About the things to look out. First, at 10:30 a.m., Indian manufacturing PMI data is due. Then in the aftermarket hours, Germany's consumer inflation and US number of available job openings are scheduled to release. These are some of the items we need to keep an eye out today. Here, please be careful. All European stock market today going to open after 4 days of holidays. So that also can cause some volatility. Coming to technical, Nifty opened 130 points gap up and hit a new record high 22,530. But finally it closed at the same place as opening. Thus, on the daily chart, it formed a doji candlestick pattern indicating indecisiveness among buyers and sellers about future market trend. However, the hourly momentum indicator triggered a negative crossover which might lead to some more consolidation. And also, if we see the day's price action, Nifty moved sideways following a robust start as it encounters the strong resistance at 22,500 which coincides with the highest open interest on the call side. Hence, to maintain the upward momentum, Nifty must decisively breach the 22,500 mark. On the downside, the support is at 22,350 and as long as Nifty holds above this level, the overall outlook remains positive. Then in case of Bank Nifty, it opened 270 points gap up and unlike Nifty, Bank Nifty moved upward, surpassed and closed above the immediate hurdle 47,500. Thus, on the daily chart, it formed a bullish candlestick pattern but the volumes were lower than the average volume. So, Bank Nifty may face next immediate resistance at 47,800 to 48,000 and if it decisively goes past 48,000, it can hit a new all-time high with lower end support around the 47,000 to 46,800 zone. On the options front, the maximum call option open interest was at 22,500 strike followed by 23,000 and 22,700 with meaningful new call option writing at similar strikes in the similar sequence. Whereas on the put side, the maximum open interest was at 22,300 strike followed by 22,000 and 22,200 with new put option writing at 22,500 strike then 22,300 and 21,800. Thus, from the options data, it indicates the immediate resistance at 22,700 and support at 22,300 to 22,200. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.